Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're taking a close look at BitFuFu. We've gathered some analysis and reports to really explore their business, how they've been performing lately, and what the whole landscape looks like around them.
Sounds good. It's a fascinating space.
Right. Our goal is pretty straightforward. Just quickly and clearly unpack what seems most important for you, the listener, to understand about BitFuFu right now based on the info we have.
Okay. So BitFuFu, they're right in the thick of it, aren't they? Digital asset mining, particularly cloud mining.
Exactly. And it's an industry that, well, it moves incredibly fast. Lots of swings. So getting a clear picture of one specific player like BitFuFu, that's definitely useful.
Absolutely. Where should we start? The financials.
Okay, let's unpack this. Looking at the financial numbers presented, one of the first things that really jumps out is their revenue growth. The reports show a pretty substantial leap from around $284 million back in 2021 up to roughly $463 million in 2024.
Wow. Okay.
Yeah, so that translates to a compound annual growth rate, a KDR that's, well, it's pretty robust, somewhere like 18 to 20%.
That kind of revenue trajectory, especially over several years, it points directly to strong demand, doesn't it? And real expansion in their core mining services.
It really does. And in a sector known for its volatility, seeing numbers like that consistently, it certainly stands out.
No kidding.
And it's not just the top line either, the net income picture. That's also seen a really significant improvement.
Oh, how so?
Well, it went from about $2.44 million in 2022 all the way up to $55.28 million in 2024. Quite a jump.
$55 million. Okay, that's a big shift. That suggests profitability is really improving then.
Seems like it. It suggests they're not just growing sales, but maybe becoming more efficient or getting better leverage in their operations.
Right. More efficient or maybe benefiting from scale or possibly better pricing on their services. Could be a mix.
And while we didn't have, the specific earnings per share figures right here, to calculate a precise PE ratio from this data alone, this trend in net income definitely points towards positive momentum on profitability.
It certainly paints a picture of improving financial health.
Now, speaking of other financial bits, the analysis did touch on things like price to earnings, debt to equity, free cash flow, return on equity.
The usual suspects for financial health checks.
Right. We saw the stock price was around $4.43 at one point mentioned, but getting that precise PE, well, you'd need the estimated EPS and the share count. That wasn't fully detailed here.
Which is typical for summary analysis. You get the headline figures.
And similarly for debt to equity. It mentioned total assets around $377 million, current liabilities about $14 million. But nailing down the exact debt figure for the ratio needs, digging a bit deeper.
Into the official filings, usually.
Yeah. And free cash flow, ROE, highlighted as important metrics you could derive, but again, needing more granular data.
But it's important for listeners to understand why we look at these. PE gives you market sentiment versus earnings. Debt to equity is absolutely critical in mining because it's so capital intensive, right?
Right.
Buying hardware, building out sites.
That's a lot of cash or borrowing.
Exactly. So understanding their leverage is key. Free cash flow. That's the real cash generated after all the bills are paid, including capital spending. Vital stuff.
And ROE.
Return on equity shows how well they're using shareholder money to make profit. So yeah, these aren't just random numbers. They really help assess the company's health and efficiency in this demanding industry.
Makes sense.
And the reports are right to point out, for those precise audited figures, you really need to look at the company's public SEC filings. That's the gold standard. Or check reliable financial data providers or the company's own investor relations site.
That's where you get the real nitty-gritty.
Yep.
Okay, let's maybe pivot a bit from the balance sheet. Talk about the business itself. What's giving BitFuFu its edge, according to this analysis?
Well, the information points to two main things. One is what's described as an exclusive strategic partnership with Bitmain.
Bitmain, noted as the world's leading mining hardware maker.
Correct. And the second thing is their own proprietary systems for managing ultra-large-scale hash rate dispatching. So basically managing all that computing power effectively.
That combination sounds potentially very powerful, the Bitmain partnership, if it's truly exclusive with the top manufacturer.
That could mean preferential access, right? Getting the latest, most efficient miners, maybe even better pricing or delivery times. That's a huge deal in this industry where hardware is everything.
Definitely a bottleneck for many.
And then you combine that potential hardware advantage with their own smart system for managing it all that suggests they could have a real technological edge, maybe leading to better cost control, especially on the cloud mining side.
So where does that put them in the market hierarchy? Are they like a scrappy upstart or already a big player?
The analysis seems to position BitFuFu as aiming to be a world-leading cloud mining provider, focused on secure, compliant infrastructure.
Okay.
And given the kind of scale we're seeing in their operational numbers and these strategic partnerships, it feels like they're pretty established already, more like an industry leader or at least a major player than a small challenger trying to break in.
Got it. And they're operating in a pretty complex environment, right? What are the big industry trends they have to navigate?
Oh, definitely complex. The reports highlighted a few key ones. First, you've got growing institutional interest in digital assets. More big players getting involved.
Which should mean more demand for reliable mining infrastructure.
Potentially, yes. But then second, you have the regulatory side. Ongoing scrutiny, different rules in different countries.
Yeah.
That's a constant risk factor. Governments are still figuring crypto out.
Always a wild card.
And third, there are technological shifts. Things like the push towards more energy-efficient ways to run blockchains, like proof of stake. That could, eventually impact demand for the traditional proof-of-work mining BitFuFu specializes in.
So a lot to juggle. Political, technological, market forces.
Absolutely. They need to navigate all of that.
Which makes their recent operational updates even more interesting. The numbers mentioned, especially from April 2025, seem to show they're executing pretty well despite those challenges.
They really do look strong. That April data, quite striking. Total hash rate under management jumped significantly up, 37.4% in just 1 month?
Yeah, hitting 28.3 exahashes per second, EHs, which is just a massive amount of computing power.
Huge. And that monthly growth rate is really notable, suggests rapid deployment or optimization.
And their power capacity also expanded, up 18.4% to 566 megawatts globally.
And globally is key there across 5 continents, it said. That suggests diversification, which helps with resilience against local issues, maybe helps manage energy costs too.
Good point. The reports also noted their Bitcoin holdings went up by 61 BTC from March to April, totaling over 1,900 BTC.
And production in April was 209 BTC, mostly cloud mining, but some self-mining too.
So what does all that operational growth really signify? What's the takeaway from those numbers?
Well, collectively, it tells us a few things. 1, strong scaling capability. They're adding capacity fast. 2, the global footprint points to resilience and maybe smart energy sourcing. 3, growing Bitcoin reserves. That's a really strong indicator of healthy cash flow.
Meaning they're making enough to cover costs and still stack coins.
Precisely. They're generating enough Bitcoin from mining to pay for their significant operating expenses, electricity, maintenance, staff, and still have surplus to hold on to. That's a positive sign.
And these kinds of operational wins, they often connect to how investors feel, right?
Oh, absolutely. In the crypto mining sector, operational metrics like hash rate growth and Bitcoin production are very closely watched. Strong performance there often correlates with positive investor sentiment and can support the stock price, assuming other factors are stable.
And the reports also mentioned BitFuFu showing up at Bitcoin 2025, sponsoring, having their VP of Investor Relations speak.
Right. That kind of active participation in major industry events is important. It's about visibility, engaging with investors, engaging with the community. It can definitely boost their profile, potentially attract more attention. It was even mentioned as a possible catalyst.
Okay. Now, what about the people running the show? Management, governance. The reports briefly mentioned experienced leadership, calling them industry pioneers.
Yes, it was brief. While the immediate analysis didn't dive deep into specific execs or board structures, that mention of experienced leadership is usually seen as a positive.
Worth noting, at least.
For sure. And for investors who want to dig deeper into who's on the board, what their backgrounds are, or look into things like insider transactions, the place to go is always the official SEC filings, specifically Form 6K for foreign private issuers like BitFuFu.
Right, those public documents have the detailed info.
Exactly.
Okay, let's circle back quickly to valuation and, importantly, the risks. We noted earlier some metrics weren't fully detailed. We saw the stock price volatility, quite a wide 50-day range mentioned, between roughly $3.30 and $5.50 in late May, price bouncing around.
Yeah, that volatility is pretty much baked into this sector, isn't it? Comes with the territory.
Seems like it. And no mention of a dividend being paid.
Which isn't surprising for a growth company in a capital-hungry industry like mining. They're likely reinvesting any profits back into growing the business, buying more machines, expanding capacity.
Makes sense. So for that complete valuation picture, price to book, beta, things like that, it really comes back to checking those official sources.
Yep. SEC filings, reliable data providers, that's where you calculate those specific ratios for a full assessment.
Okay. Now, risks. What specific ones did the analysis flag as being important for investors to watch?
Several key ones came up. We touched on the supply chain dependency on Bitmain. That exclusive partnership is an advantage for access.
But also a risk if something happens to Bitmain.
Exactly. It concentrates risk on a single supplier. If Bitmain has production issues, delays, price hikes, BitFuFu feels it directly. That's a vulnerability.
What else?
Regulatory risk is huge. We talked about it. Crypto laws are still evolving everywhere.
Yeah.
A negative regulatory shift in a key jurisdiction could seriously impact their operations or profitability.
Like changes to energy usage rules or crypto taxes.
Or even outright bans in some places. It's a constant uncertainty. The reports also mentioned potential lawsuits noted in recent SEC disclosures. That adds a layer of legal risk to monitor. And then there are the broader macroeconomic factors. Things like interest rate changes affecting borrowing costs and investor appetite for growth stocks, especially in volatile sectors like crypto.
So a fair bit to keep an eye on there.
Absolutely. Monitoring these risks is crucial. The sector's inherent volatility demands it.
So how does BitFuFu look when compared to some of its big competitors, say Marathon Digital or Riot platforms? Did the analysis offer any comparisons?
It did draw some contrasts. It highlighted BitFuFu's model doing both cloud mining for others and their own self-mining. That's a bit different from peers like Marathon or Riot, which often focus more heavily on just their own large-scale self-mining operations.
So maybe more diversified revenue stream for BitFuFu.
Potentially, yes.
Huh?
Cloud mining offers service revenue, while self-mining captures the upside of the mined asset directly. Then there's the Bitmain partnership, again presented as a distinct advantage for getting hardware. Competitors usually build or lease their own data centers and might rely more on the open market or other manufacturers for their mining rigs.
Any comparison on scale, like hash rate?
The numbers mentioned put BitFuFu managing around 28 EHs. This compared favorably to figures cited around 23 EHs for Marathon and maybe 20 EHs for Riot around that same time, based on the available data.
So competitive on scale.
Seems so. And BitFuFu also emphasizes its proprietary dispatch system as an innovation edge, whereas competitors might focus more on things like their energy strategies or overall fleet size and efficiency.
Interesting. And the analysis also suggested BitFuFu was maybe doing better recently in terms of growth and profitability compared to some competitors.
Yes, that was a point made. It implied that BitFuFu seemed to show stronger revenue growth and, importantly, improving profitability compared to some peers who might have been struggling more coming out of recent market downturns.
Why might that be?
Well, the implication was that BitFuFu's specific model, the mix of cloud and self-mining, perhaps boosted by that Bitmain hardware access, might have made them more resilient or allowed them to capitalize better on market conditions compared to those purely focused on self-mining or lacking that specific hardware pipeline. Showing improving margins when others weren't is definitely notable.
Okay, so taking all that in the financials, the business model, operations, risks, the competition. How does the market seem to feel about BitFuFu right now? What's the sentiment?
Based on the information, it looks like a mix. Definitely some optimism, likely driven by that strong operational growth we discussed, but also caution, reflecting the sector's volatility and those regulatory risks.
And the stock price reflects that mix.
Seems so. That wide 50-day trading range suggests uncertainty. Trading volume was noted as slightly elevated, which means people are paying attention, actively trading it, and the analyst consensus rating mention was a buy with a $7 price target cited in the source.
A buy rating suggests analysts see upside then.
It does. And the analysis also pointed out that recent news flow has been positive, focusing on those operational wins, the hash rate, the power capacity, the Bitcoin stacking.
Right, no major negative headlines mentioned.
Correct. And positive operational news like that tends to fuel bullish sentiment, especially among investors who follow the crypto space closely. But again, that underlying volatility and the regulatory overhang temper pure enthusiasm. It's a balance.
So looking forward, what does the future potentially hold? What did the analysis suggest about opportunities or upcoming catalysts?
Well, the expectation seems to be continued expansion. Building on that recent momentum in hash rate and power capacity, logically that should lead to future production gains, assuming they keep executing.
More mining power equals more potential Bitcoin production.
Essentially, yes. And that increased visibility from things like participating in Bitcoin 2025, that could also act as a continued positive catalyst, keeping them on investors' radar.
And the broader opportunities and risks, still the same main ones?
Pretty much. The opportunity lies in the overall growth of the digital asset ecosystem, particularly the demand for cloud mining services as adoption increases. But the big risks persist. Regulatory changes are always looming, and their fortunes are still very closely tied to the price of Bitcoin. That price volatility directly impacts the revenue and profitability. It's unavoidable.
Okay, let's try to synthesize this. To wrap it up, what are the absolute key takeaways about BitFuFu from all the information we've covered?
All right. Based on the materials, the main story is strong operational growth. We see significant increases in key metrics: hash rate, power capacity, and their Bitcoin reserves. They're also showing improving profitability, which is crucial.
And a key enabler seems to be that Bitmain partnership.
Absolutely. That exclusive strategic relationship looks like a major competitive advantage, giving them an edge in getting the necessary hardware for both their cloud services and their own mining. It positions them well within the industry.
And while we need to look deeper for some specific valuation details,
Right. While a full valuation requires digging into official filings for precise metrics, the company's operational execution and the positive trend in profitability make them stand out among crypto infrastructure providers currently. They seem to be doing things right operationally.
and one summary even included a buy-hold recommendation, didn't it?
It did. And that recommendation, based on the source analysis, appears rooted in that strong operational performance and the potential for the stock to appreciate, especially if Bitcoin prices hold up or increase.
But with a big caveat.
A very important one. The analysis strongly emphasizes that investors must keep a close watch on regulatory developments around the world. The risks tied to the overall crypto market regulations, price swings are significant and inherent to the sector. You can't ignore those.
That makes perfect sense. A company with clear strengths, but operating in a very dynamic, sometimes unpredictable environment.
Well put.
So maybe a final thought for you, our listener, to chew on after this discussion. Think about the technology itself. We talked about regulatory risk, price risk. But what about fundamental technological shifts? Like maybe a broader move away from proof-of-work mining towards more energy-efficient methods. How might something like that eventually reshape the entire competitive landscape, even for a company like BitFuFu with strong current partnerships? It's another layer of potential long-term change to consider.
A very relevant point for the long view.
So that wraps up our deep dive into BitFuFu for today. We really hope this conversation gave you a clearer perspective on the company based on the analysis we looked at.
Hope it was helpful.
If you found this useful, please do consider subscribing to Investing Talk Podcast. Give this episode a like, and maybe leave us a comment. Let us know your thoughts or what other companies or topics you'd like us to explore next time.
We appreciate you tuning in.
Thanks for joining us.